Experts split over whether the housing market is set to plummet further or start on its recovery path. Warnings of delays at airports, but this time it's the firefighters threatening industrial action. And bad news for fast food lovers, prices are set to rise. It's Wednesday, the 30th of November, 2022. Welcome to Fear and Greed, Australia's most popular business podcast. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael. It's Wednesday. We know what Wednesday is.
Yes, well, there's actually two exciting things about today, Sean. Number one, it's the last day of spring.
That's exciting.
And of course, as you mentioned, Wednesday is the day that How Do They Afford That comes out, our other podcast that features me and Canna Campbell, the founder of Sugar Mama TV. It's all about kind of making your money work a little bit harder for you. And today's episode is about something that I think a lot of people will have experienced in recent months. It's about bill shock. Basically, when you open up your power bill, really, and it is twice what you're expecting. And so it's just some tips on kind of how to deal with that, how to prepare for that financially, but also then how to try and kind of get that bill back down. So it's look, I think it's a worthwhile topic, and hopefully some really kind of handy tips and things that people can actually use to try and improve the household budget.
How to apologise to your kids after you swear because you see when you open the envelope and see the price.
Yeah, absolutely. And how to tell them then that they're not allowed to use a computer or a TV or anything that uses electricity for the foreseeable future. But look, that episode, you can find How Do They Afford That wherever you listen to podcasts. We'll also put a link in today's show notes as well. And you've got an interview coming up after the show, Sean, with Andrew Hansen from recruitment consultancy Robert Walters.
Yeah, it's all about the Great Resignation or the potential Great Resignation. Robert Walters has done a survey showing that the vast majority of people are looking for big pay rises, preferably at least 7%, which is what the inflation rate is, or they're willing to change jobs. Now, those numbers probably overstate the reality that Andrew takes us through. It's a really interesting chat about what's going on in the labour market at the moment.
Yeah, it's a really good one. It is coming up a little bit later on, but the main story this morning, Sean, the housing market is back in the spotlight with economists from ANZ forecasting another 7% fall in prices next year across capital cities.
And that's mostly because ANZ reckons interest rates need to rise another 100 basis points, which would add substantially to the cost of repaying a home loan. In fact, it would put repayment levels above where they were pre-pandemic. The official cash rate currently is 2.85%, putting the standard variable home loan rate, around 5% or thereabouts. ANZ is saying that rate will rise by another 1 percentage point, taking the standard variable rate to 6%, and that will be enough to trigger further large falls. In all, ANZ reckons peak to trough capital city prices will drop 18%. The good news is the bank thinks they will gain about 5% in 2024 as mortgage rates fall.
The thing about property prices, Sean, and the kind of the housing market more broadly is that everybody has an opinion on it. And that's okay at a barbecue, for example, but here we're actually seeing housing market watchers who do this kind of professionally coming out with some fairly different opinions. Yesterday, we had SQM Research put out a report which was much more upbeat about house prices, saying that capital city house prices will rise between 3% and 7% next year, even if the cash rate goes up another 100 basis points.
That's right. SQM's base case for the economy is that rates rise, but the cash rate stays under 4%. Remember, it's 2.85% now, so it's 100 basis points. Inflation falls to around 5% and 7.3% at the moment, expected to go to 8% by the end of this year, and unemployment stays low. Now, if rates don't rise above 4%, there won't be much forced selling, SQM says, and that will support house prices. The big winner will be Sydney, where prices next year could actually rise between 5 and 9%. Of course, Sydney's also been the biggest loser, with prices falling more than 10% since their peak. Helping in that city is immigration and a shortage of rental accommodation. But SQM is quite upbeat about a bunch of other capital cities. Perth house prices will jump 8%, it says, and somewhere between 1% and 5% in Melbourne and Brisbane. Adelaide will be flat, but remember that city hasn't run as hard either. Now, prices in Hobart, Darwin and Canberra could fall, according to SQM, but certainly much more upbeat than ANZ.
So in this situation then, Sean, where everybody has credibility in this debate, who do we believe?
I wish I knew. So does the Reserve Bank Governor Philip Lowe, who this week apologised for suggesting interest rates wouldn't rise until 2024. I bet he wishes he had a crystal ball too. Now, the big lenders say housing arrears, that's basically people falling behind in repayments, haven't increased much so far, and that's a really good sign. But people also can't afford to borrow as much money. Simple as that. That's a bad sign, and that's kind of why ANZ's forecast is so pessimistic. Bottom line, Michael, no one knows.
You know what? It might almost be time for a rematch in our great housing price debate between Stephen Koukoulas and Christopher Joy. Remember that one?
Yes, that was a great debate. Chris, of course, believes that housing prices will fall, 20% or so. Stephen doesn't think they'll fall by anything more than 10%. We had a debate between the two of them. It was great fun.
It certainly was. Anyway, let's move on to local markets. What's been happening?
S&P ASX 200 finished up 0.3% yesterday to 7,253 points. It was a really good day for iron ore companies, with the price of the ore pushing above $100 a tonne for the first time since September. BHP and Fortescue both jumped 2%. Rio Tinto was up 3.5%. The banks were higher, the energy companies were lower, while the retailers were flat. The big mover yesterday was New Zealand-based Fisher & Paykel. It said it had made more revenue for the 6 months to the end of September than expected. Profit was up 57% on a year earlier, and its share price jumped 10%, easily the best of the top 200.
And international markets, what's making news?
Look, there are two big things going on at the moment. The first is what's going to happen to US interest rates, with a growing cohort of investors believing the US Federal Reserve will slow the pace of rate hikes when it meets in 2 weeks' time. Chair Jerome Powell is scheduled to speak later this week. Traders will certainly be listening to that one. The second is what's going to happen in China and its COVID-19 policy. Asian stocks surged yesterday. Hong Kong's benchmark jumped 3% on hopes protests in China have dissipated, but coronavirus cases continue to rise, and no one is really sure what will happen on the streets of major cities like Beijing and Shanghai. Also supporting Asian markets yesterday, Chinese regulators stepped in and provided more support to builders in the world's second biggest economy. In a sense, global markets really are waiting to see which way to move, subject to both the US and China. Finally, in terms of prices, oil prices jumped a bit yesterday, as did gold, and the Aussie dollar is back above 67 US cents.
So really, Sean, today's show is all about speculation. We've got speculation about house prices. We've got speculation about what's going to be happening with US interest rates, and speculation about what's going to happen with China and its COVID-19 policy. There doesn't seem to be a great deal of certainty at the moment.
This is a show based on financial markets, Michael. What do you expect?
That is a very, very good point. All right, we'll be back in a moment with the rest of the day's business news. Sean, there has been plenty of fallout from the Federal Nationals' opposition to the Indigenous Voice to Parliament referendum that they announced on Monday.
Leader David Littleproud is facing a split within the party, with former Minister Andrew Gee, who's still in Parliament, saying he'll campaign for the Voice. Littleproud's announcement has attracted plenty of criticism, with supporters of the Indigenous Voice saying the Nats hadn't considered the referendum vote thoroughly enough. In fact, some suggested they should have just taken a bit more time. Opposition leader Peter Dutton is in a tricky situation. Yesterday, he said the Liberals were waiting on more details from the government before settling on a position.
There could be more delays at airports around the country next week, but this time it's the firefighters, Sean, that are set to walk off the job over long-standing concerns around staffing levels and pay.
It must be nice for Qantas to not be the scapegoat, don't you reckon, Michael?
Yeah, because last week it was all about the cabin crews, wasn't it?
Yeah, it was cabin crews last week. And this time it's the firefighters. It's actually the aviation branch of the United Firefighters Union. It's planned a national strike across 27 airports from 6 a.m. to 10 a.m. next Friday, saying Air Services Australia, who employs the firefighters, has reduced resourcing, putting travellers at risk. Now, it will be the first time the firefighters have taken action. That's if it goes ahead. And it basically means no aircraft will be able to use the airports in that period. The union is asking for a 15% pay rise over 4 years. Hopefully, negotiations will reach some sort of agreement ahead of next Friday, because tell you what, not having any planes landing for 4 hours or taking off for 4 hours will create chaos.
Yeah, that's quite extreme, isn't it? It hadn't occurred to me that would mean there are no operations that can take place safely.
That's exactly right. So let's hope they can find some sort of agreement in the meantime.
Yeah, absolutely. Now, we mentioned this one at the top of the show, Sean. KFC is set to hike prices on its burgers after its owner in Australia, Collins Foods, said profit margins were being squeezed.
Yes. Now, the prices of chicken, oil, chips, and energy have all jumped, and even a rise in the sales of fried chicken and burgers hasn't been able to offset the increases in those input costs. Now, Collins Foods runs 264 KFC outlets in Australia. Its share price fell 20% yesterday after the announcement. It also said inflationary pressures are still rising. The group also owns 62 KFC outlets in the Netherlands and Germany. It's got 24 Taco Bell outlets in Australia. Can't help myself. Shut up and take more of my money.
Oh, well done.
Thank you.
I was not expecting that. Oh, well played. You're pretty much writing their new commercial for them.
Yeah, that's right.
We'll see if they take it up. All right. Now, at Ramsay Healthcare's annual general meeting yesterday, Sean, the board got plenty of questions about why the proposed takeover by private equity failed, because this was a big deal.
Yeah, I mean, it's not surprising given that the PE group KKR offered $88 a share and the private hospital operator is now trading around $66 a share. Chair Michael Siddle said the board did everything to help facilitate the talks, which he said were protracted. They certainly were. They took over a year. He made it clear that Ramsay didn't reject the offer. Rather, it was withdrawn. Mr. Siddle said management was now just running the company. That means it may try and undertake some acquisitions, but it's not surprising, given the share price now, to what was offered, that some shareholders are a little bit antsy.
Yeah, it kind of makes sense. Now, Sean, Brickworks, which does, I'm happy to say, exactly as its name suggests, has signed an 11-year gas supply with Santos, notwithstanding high prices at the moment.
Guess how many bricks Brickworks makes every year?
Millions, 100 million, no, 100 million.
500 million bricks every year.
Wow. Okay, I wasn't expecting. That's two things. You got me with your KFC line, and now the number of bricks.
Now, that takes a lot of energy, of course. I mean, in fact, building supply companies use a lot of energy, particularly cement companies. They're very energy intensive, and manufacturers like Brickworks need long-term energy contracts, hence the deal announced yesterday. What's slightly surprising, though, is it occurred ahead of an expected intervention by the federal government into the gas market. Now, that intervention is probably about some sort of retail price caps, but that will flow onto the wholesale and business sector. So it's a bit surprising it happened. Anyway, 11-year gas supply deal to make 500 million bricks a year.
Now, energy giant Woodside's share price fell as much as 5% yesterday, Sean, after releasing lower than expected production guidance for next year.
Australia's largest oil and gas company said it had experienced delays at new oil projects in West Africa and the US, and also a long maintenance shutdown at its Pluto LNG platform in Western Australia. Woodside Energy is a global giant, one of Australia's biggest companies, and one of the projects that's been delayed in North America is known as the Mad Dog oil expansion in the Gulf of Mexico. Is that not a great name?
That is a fantastic name.
The Mad Dog oil expansion.
That is great.
Woodside also showed yesterday that it had more strings to its bow than oil and gas, saying it had been picked by New Zealand supplier Meridian Energy as its preferred partner to develop a green hydrogen project in that country.
Mad Dog. I can't believe that's actually real. I thought you were making that up. It's real.
Mad Dog.
That's great. Now, there was plenty of chatter yesterday, Sean, about the state of the Great Barrier Reef after a United Nations-backed mission recommended that it be added to the list of endangered World Heritage Sites.
The mission warned that without ambitious, rapid and sustained climate action, the world's largest coral reef is in peril. It follows a 10-day visit to the reef last March. Environment Minister Tanya Plibersek wasn't real impressed all in all. She blamed the previous government for the recommendations, saying Labor had done more in 6 months to protect the World Heritage Site than the coalition did over 9 years. She also didn't really support the idea that it be listed on the Endangered World Heritage Site. There you go.
Brisbane-based cryptocurrency exchange and brokerage Mine Digital may have traded while insolvent for several months, and digital assets worth a significant amount were transferred out before its collapse in September. This is all according to the administrator.
Yes, it's not something that you want to hear. The Financial Review is reporting that PKF partner Brad Tonks told creditors who are chasing $16 million that he had not found realisable assets beyond the initial $20,000 identified early in the process and would need more funding for further investigations. Mind Digital's parent company, ACCE Australia Proprietary Limited, collapsed into administration in late September, just weeks before the spectacular collapse of Bahamas headquartered exchange FTX. Now, Mind Digital and related entities had transacted on FTX. This is just an example of the collapse in cryptocurrency starting to filter through the economy.
And finally, Sean, before we get to international news, former New South Wales MP Daryl Maguire, who's at the centre of the corruption probe which led to Gladys Berejiklian's resignation, has been charged by the Commonwealth.
Yes, Maguire was granted bail at a hearing in Sydney's Downing Centre local court yesterday, where he faces charges from the Commonwealth Director of Public Prosecutions for conspiracy to commit an offence. The former Wagga Wagga Liberal MP left Parliament in 2018 after emerging at the centre of a corruption probe investigating allegations he sought payment for his role brokering a property deal near the new Western Sydney Airport. In later hearings, former Premier Gladys Berejiklian revealed she had been in a relationship with Maguire at the time while he was in Parliament. As a result, she ended up stepping down.
All right, moving on to overseas news now, Sean. And protests and turmoil at Apple's key manufacturing hub of Zhengzhou is likely to result in a production shortfall of close to 6 million iPhone Pro units this year.
That is a huge number of iPhones. Now, the situation remains fluid, according to Bloomberg, and will depend on how quickly Foxconn, the Taiwanese company that operates the facility, can get people back to assembly lines after all those violent protests against the COVID-19 restrictions. If lockdowns continue in the weeks ahead, production could be set further back. Apple's shares fell 2.6% in New York yesterday, marking the biggest one-day drop in more than 2 weeks. In fact, Apple's share price is down 19% this year.
And just staying with Apple, Sean, the world's largest tech company, well, in fact, the world's largest company, full stop, has picked a fight with Twitter and its new owner, Elon Musk, dropping all advertising from the social media platform.
Yes. In fact, it's dropped most of its advertising, it turns out. Now, in response, Musk has threatened to withhold Twitter from Apple's App Store. Elon, the self-proclaimed chief tweeted that Apple had mostly stopped advertising on Twitter and then asked if the company hated free speech in America. Apple is not only a big spender on Twitter, but its App Store is a major gateway for users to get onto Twitter, of course. Now, according to media reports, Phil Schiller, who's the longtime Apple executive who oversees the App Store, deleted his Twitter account after Musk reinstated the account of former President Donald Trump. And this is a carry-on from there. Who knows?
It is an ongoing saga, isn't it? All right, Sean, finally, one, I suppose, for the voyeurs out there. Global property giant Knight Frank has come out with its forecast of how much major city residential property prices will rise next year, and Dubai tops the list.
Yes, Knight Frank reckons Dubai prices will jump 13.5% next year, way ahead of number 2 city Miami. What's really interesting is the main reason, and that's because Russian money is flooding into Dubai, pushing up prices. London, on the other hand, is losing Russian wealth. Its prices are expected to fall by 3%, one of the worst of the major cities of the world. Overall prices are expected to rise by 2%, which is exactly what Knight Frank has forecast for New York. Los Angeles and Paris are supposed to be strong performers. Hong Kong is an underperformer. And yes, both Sydney and Melbourne fit into that underperforming class too.
All right. Up next, Sean, is the Fear and Greed Daily interview. And today you're speaking with Andrew Hansen from recruitment consultancy Robert Walters.
Yep, all about what's going on in the recruitment world. They've done a survey which shows some job classes are earning far higher wage increases than others. And, others are certainly not winning high wage increases at all. It's a fascinating chat.
Yeah, it really is. It's coming up next in the Fear and Greed playlist or at fearandgreed.com.au. And don't forget to check out as well the new episode of How Do They Afford That, which is out today. Thank you very much, Sean.
Thank you, Michael.
It's Wednesday, the 30th of November, 2022. Make sure you're following the podcast and join us online on LinkedIn, Instagram, Twitter, and Facebook. I'm Michael Thompson, and that was Fear and Greed. Have a great day.